Hey everyone, welcome to another episode of AdMail. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everybody, Adam Bergman here, tax attorney and founder of IRA Financial. And on today's AdMail, self-directed IRA distributions. Today's podcast will answer 3 questions surrounding the topic of taking a distribution from a self-directed IRA. So 3 really good questions. One on taking an in-kind distribution of a vacation home, another taking a distribution from a self-directed IRA LLC, and the third dealing with requirement of distributions when you own in-kind illiquid assets. What do you do? So without further ado, let's get started. It's going to be a really fun episode. I'm going to keep the questions and answers short to the point so you can grab the information you need and kind of move on. That's the motive of the podcast, and the intent is to kind of give you the answers you need quickly so you can do other stuff with your day and don't have to spend more time on this kind of dull IRA distribution subject. So first question is from Chris W. I own a vacation home in my self-directed IRA. Do I have to sell the house to take a distribution? So great question, Chris. Get this question a lot. No, you can take cash out of an IRA, right? But you can also take an in-kind asset like a home. So before I jump in all the questions, let's kind of just briefly summarize how the IRA, Roth IRA distribution rules work. In the case of a pre-tax IRA, you can take an IRA distribution anytime you want, but you take the money out before 59.5, tax and a 10% early distribution penalty. If you take the money out after the age of 59.5, you owe income tax. So the amount of the IRA distribution is added to your income on your 1040, and it's added together, and then that will determine the tax rate that the income would be subject to based off the total aggregate amount of your taxable income. If you have a Roth IRA, in order to pull the money out of the Roth IRA tax-free, you need what's called a qualified Roth IRA distribution. It means you're over the age of 59.5, and the Roth's been open at least 5 years. Roth IRA contributions, you can pull out anytime you want, tax-free, penalty-free. So you can make a Roth IRA contribution today, pull the money out tomorrow. It's the earnings on the contribution where you have to wait to 59.5 in the 5 years. Now, pre-tax IRA, beginning at age 73, you have to take a required minimum distribution, which is about 3% of your valuation of all your IRAs. Roth IRAs do not have RMDs, no required minimum distributions per Roth. Okay, so now that we know how all the self-directed IRA and the self-directed Roth distribution rules work, Chris, let's get to your question. So you can do an in-kind distribution of your home. You'd get that valued. So whatever it's worth today, it's not what you paid for it, Chris. It's what it's worth. So you can use your tax records. You can use an online source. Maybe you get a letter from a broker, but you want to have obviously an independent, fair, reasonable value. And that would be deemed the value of the distribution. You would then retitle the asset from your IRA to your personal name, and then it's yours. It's that simple. Okay. Happens all the time. We'll work with you to do it. Just make sure you talk to us so we can get everything done. We'll then send a 1099-R to the IRS showing the distribution. And then obviously you're going to pay tax on that when you file your tax return the following year. So thank you for that question. And one more thing, Chris, you can actually take what's called a discounted valuation. And we work with appraisal companies that would do that based off, lack of marketability, things like that, where you can probably get for a home 20 to 40% discount potentially on the distribution, maybe if you convert it, but probably just not on a distribution. It's probably not going to be an option. But if you decide to convert it, there could be an option. Second question is from Carly T. Carly wants to know, hi, I have a self-directed Roth IRA LLC. Can I take a tax-free distribution directly from my LLC? So generally, the way a self-directed IRA LLC works, just for the listeners, is you have an IRA that invested in an LLC, a limited liability company. The LLC is managed by generally the IRA owner, and the LLC would then make the investment. Title would be in the name of the LLC, so you'd get more privacy. You get what's called checkbook control because the manager of the LLC can simply write checks or do a wire to execute the transaction. You don't have to go back to the IRA custodian to get things done. However, when you do a distribution, it should go back through the custodian. So let's say you have $100,000 in your LLC bank account at Capital One, and you want to take $20,000 distribution, right? So with the Roth IRA, again, you want to make sure you're 59 and a half at least, and the Roth's been open at least 5 years. It's an and. It's 59 and a half and 5 years. It's not or. Okay. So you should not want to take premature Roth distributions. If you do, based off the ordinary rules, the contributions will come out before. So at least whatever you contributed, you could pull out tax-free. Okay. So the way it would work is you have 100K in your LLC and you want to do a $20,000 distribution. You'll simply send the money back to IRA Financial, then complete a distribution request form. We'll wire you or send a check for the 20K. This way we can code it and report it. The reason it needs to go through us is if you just take the money out of your LLC, we're not going to know about it, right? So we're not going to be able to report it to the IRS on the 1099-R. And that's why it just needs to go kind of through us as your IRA custodian, trustee your IRA. We'll then disperse it to you and we'll then be able to properly report it to the IRS on the Form 1099-R. So from a reporting standpoint, procedurally, LLC, IRA custodian, then the distribution can be sent to you individually. So Carly, great question. Third, final question of today's episode is from YouTube. And this individual wants to know, I have a self-directed IRA with you, and almost all the assets are tied up in liquid private business investments. I am turning 73 this year. How do I take required minimum distribution? So this is a superb question. Thank you for asking it. So you can take a percentage of the liquid asset, just like Chris asked. You don't have to just take cash. You can take in-kind assets distributions, not a problem. Now, if all your IRA assets are in the self-directed IRA, then that is going to be your universe of IRAs. But if you have an IRA at Schwab or Fidelity, then what you need to do is add up all your IRAs, the value as of 12/31, let's say 2024, and then generally it will be about 3%. So if you have 100K, it'll be about $3,000, and you can satisfy that RMD from any IRA. You don't have separate RMDs for your IRA with IRA Financial, your IRA with Schwab, your IRA with Vanguard. You add them all together. So I don't know, obviously, if you have other IRAs, the email question didn't provide that information. If you did, then you can satisfy the RMD with other IRAs. If you don't, then you either will probably have to sell a percentage of that private placement, which isn't ideal, or you would take an in-kind percentage. So let's say you have an investment for 10K in this deal. You would take, let's say, $3,000 of that 10K, and you'd flip ownership from your IRA to you personally. So you'd have to work with the promoter and the manager of your investment. And then you would have to add yourself and increase your ownership from 0 to 3%, let's say, in this example, and then reduce the IRA's ownership from 10 to $7,000, whatever the percentage are. Again, we will help you through this, not a big deal, but you're not stuck. You do have the option of doing an in-kind distribution. You don't just have to do it in cash. Okay. You can take a house, you can take private stock, cryptos, gold, and private placement. So just something to keep in mind, right? If you're 70, 71, and you're going to turn 73 in a couple of years, this kind of stuff, you should like give it a little bit of thought. You don't have to think about it daily, and you shouldn't obviously lose sleep about it, but give us a call. Talk to us about it. We'll come up with some strategies. If you have other IRAs, just kind of make sure you have some cash. You can always sell the securities in that IRA to cover the RMD. There's no tax when you transact in the IRA, so it's not a taxable event. But depending on what you have from an investment standpoint, it's obviously easier to basically satisfy the RMD with equities or cash, which are more liquid, than having to turn in a liquid asset like a private placement and switch the title from the IRA to yourself. It's doable. It doesn't cost money. It's kind of just time consuming, where it's just much easier to tell your broker, sell $5,000 of Apple, and I'll just use that to cover the RMD this year. Now, the whole point of the RMD is as follows. Hey, We gave you the tax deduction when you set up your IRA, 5, 10, 15, 20, 30 years ago. You grew the funds tax-free based off the power of deferral. Now it's time to pay up, right? Toll is due. That's what it is. It's kind of like a toll on the highway. We let you drive all the way here, but now it's time. You reach 73. You got to start paying some of that back to the Fed. We need some of that money. We let you take a deduction. We let you grow tax-free, benefit from compounded returns, time to pay up. And eventually you're going to deplete the IRA. And when you pass, your spouse will deplete it, and then your heirs will deplete it over a 10-year period. And that's their way to capture some of this tax revenue and the deductions that they offered you in the past to make the IRA contribution. Remember, RMDs do not have any, Roth IRA, do not have any RMDs. So that's it. Thank you, individual from YouTube. Really, really good question. Thank you, Carly. Thank you, Chris. Really good episode. Hope everyone enjoyed today and learned a little bit about self-directed IRA distributions. As I mentioned in previous pods, kind of going to go with this format for a little bit, unless I get a lot of hate mail, which I haven't, so it's good. Just kind of keep the questions on specific titles and topics, categories of topics. So it's just easier to follow and it's not all over the place. So hope you guys are enjoying the new format. Otherwise, thanks for listening. Please, if you enjoyed it, please give it a good review or a thumbs up. And I always appreciate all the feedback. So thanks. Have a great day, and I'll see everyone again next week. Take care.